Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to the Zach's Friday Finish Line. I am Ryan McQueeney, an associate stock strategist here at Zach's, and today I am once again joined by Ben Rains, filling in for Maddie, who continues to be out on a well-deserved vacation. Don't worry, she will be back soon. I know we all miss her in here. Ben, welcome back to the show, and thanks for helping out these past few weeks.
Thanks for having me, Ryan. But regular hosts or not, the Friday Finish Line is always going to be here to recap this week's biggest stories from the investment and financial world. And big banks kicked off second quarter earnings season before the bell today. And since earnings is one of the things we do best here at Zach's, we're, of course, going to be touching on the results you need to know from there. But first, Ryan's going to fill us all in with some macroeconomic happenings from this week.
Yeah, just jumping right into the nitty-gritty fun stuff here. Start back on Wednesday, a couple days ago, the White House kind of surprisingly announced that it plans to impose additional tariffs of 10% on up to $200 billion worth of Chinese exports, again intensifying the trade war with China. This new round of tariffs follows very shortly after the 25% tariffs that went into effect on $34 billion of Chinese goods, and that was last Friday that those tariffs went into effect. These new tariffs, a little bit smaller but more wide-ranging, would take about 2 months for them to actually be implemented from when they were announced. Before we get into too much further, I would say, we've seen many of these proposed lists of things that are going to be targeted, some actually coming to fruition, some not so much. So whether this is actually going to happen or not, we're not 100% sure. 2 months of time before we'll have an answer that question, or up to 2 months of time. But it is worth noting because while the previous tariffs target a lot of like raw materials, this is more consumer goods, and food. So we're looking at stuff like fish, luggage, tires, dog leashes, handbags, baseball gloves, electronics, apparel, mattresses, and perhaps most importantly, furniture. I wanted to talk about this because this is one of the first kind of talking points to emerge on Wednesday. Goldman Sachs analyst Matthew Fassler said that furniture would be probably the most kind of at risk or most volatile here. According to Fassler, 65% of furniture imported into the U.S. is from China. This is going to include kind of hurt or affect home furnishing giants such as Restoration Hardware, Williams-Sonoma, At Home Group, and Wayfair. Just looking at Restoration Hardware, for example, it imports as much as 77% of its dollar volume from Asia, and the majority of that is coming from China. So furniture, of all things, now finding itself tied up in this tariff battle.
Yeah, and that's already really expensive to begin with. So
yeah, good point.
I think that's something people are definitely going to notice right away if it does end up happening that way.
Definitely. And then sticking here with the macroeconomic stuff, we also got our latest CPI data this week. U.S. consumer prices rose for the third consecutive month. In June, last month's price increases brought the CPI up 2.9% year over year. That's actually the highest monthly uptick we've seen in the last 4 years. So inflation's starting to get rolling a little bit here. Tons of reasons that the CPI would go up from year to year. But out of all of these reasons, right now, we can probably peg our recent growth on a rise in oil prices. Energy costs are tracked by the CPI. Obviously, oil prices are very closely related to gasoline prices. And oil has been going up due to falling supply from OPEC members. So just a couple years removed from this supply glut where OPEC is pumping out much too much oil into the international markets in an attempt to kind of drown out U.S. producers. Now we're short on supply. A lot of issues from some major oil producers. Basically, massive disruptions in Libya. There was a employee strike in Norway. Looking out, things that have been going on for the last few months. Venezuela's oil infrastructure has essentially collapsed recently. new sanctions on Iran has limited production there. A lot of things causing issues here. OPEC members, including its kind of de facto leader Saudi Arabia, and its allies like Russia, have said, we'll start ratcheting up production again to make up the difference. So I don't think it's something that's going to end up being a devastating type of cocktail here, but an interesting trend nonetheless. And then if you take out energy, CPI gains touched 2.3%, which was actually in line with expectations. So some interesting reads on the CPI this week, and definitely something to keep our eye on here as we finally are starting to see some hints at inflation after several years of this kind of Goldilocks economic environment. And with that, I want to get us, we're going to be talking a lot of the financial sector today, one with kind of a trending stock. So punt that over to you, Ben, the latest on PayPal, Venmo, and Uber.
Yeah, those are all very trendy names, millennial-based companies that a lot of younger people are using. And so shares of PayPal surged 3.3% on Thursday after the company announced an expanded partnership with the ride-sharing giant Uber. The basic premise here is that Uber riders will be able to use pay with Venmo option, letting Uber riders use Venmo to pay their fares in the main Uber app and for food in the Uber Eats app. Because you've already been able to use your PayPal account to ride with Uber, but now PayPal is letting you use Venmo with Uber to kind of, they're pushing the use of Venmo. So they're going to incentivize this feature by waiving the 25-cent split fare when you split with rides with friends, which is actually a great feature if some people might not even know it's there. If you're ever sharing an Uber ride, which ends up happening a lot, you can split the fare with whoever you're riding with easily. So that's how they're trying to incentivize it. And PayPal had previously introduced options with food delivery service Grubhub to do the same type of payment option. And Venmo's new partnerships come at a time when competition in the payment services field is hotter than ever before. The Cash App, which is owned by Square, is already estimated to have passed Venmo in downloads, or soon enough they will. I don't use the Cash App. I'm a Venmo guy. Most of my friends are. So the Cash App is quickly popping up, and then there's some bank-backed apps, Zelle, and then you can't ever forget Apple Pay and Google Pay, because who could forget Apple and Google in that world? But yeah, now we're gonna quickly transition then to the big banks that reported Friday morning.
Yeah, it feels like a natural segue going from the new age banks in an app to the old school consumer finance giants. So as we mentioned at the top of the show, this Friday morning is the kind of unofficial kickoff ceremony for Q2 earnings season, when all these big banks start flowing in. We typically always get JP Morgan, Wells Fargo, and Citigroup all on a Friday morning to get things underway. We also got PNC this morning. We're not going to cover it specifically because it's a bit smaller, but we do want to run through these big three. I'm going to start here with JP Morgan. Once again, outperforming expectations on both the top and bottom line. Earnings were $2.29 per share. That's 7 cents higher than the Zacks consensus estimate. Revenue was about $28.4 billion. That beat the Zacks consensus estimate of $27.7 billion and was up from $26.7 billion in the year ago period. So earnings and revenue growth, earnings and revenue above expectations, certainly what you like to see. Also a key for JP Morgan and as we'll touch on later, Citigroup, investment banking, fixed income, and equity market revenues were all up year over year. The latter of which are really leading things, the biggest catalyst. That's the equity market revenues up 24% year over year. Still, we kind of have this sense of malaise around the big financials right now. JP Morgan, for as good as its report was, slumped about 1.3% shortly after the open. Worth noting, stocks in general were down at the open, not super sharply, but noticeably. And yeah, these feels like these banks have been doing absolutely nothing this year in terms of share price returns. This rising rate environment really should be an earnings growth catalyst for these companies. It should be something that investors are, excited about in terms of these big bank stocks. But, instead we've seen this flattening of the yield curve become something that is really just causing, as I said, just a sense of malaise. Just feels like nothing's happening. It feels like, a lake on a not very windy or otherwise weather day. It's just standing still, doing nothing. Kind of boring, even, I would say. As if big banks already weren't boring enough.
Yeah, exactly. And especially if you're an investor, you're pretty bummed out by this kind of nothingness that's happening, like you said.
Yeah. Wells Fargo has had some stuff going on and not good stuff. So
yeah, that's for sure. Yeah. So we're gonna move on to the embattled banking giant Wells Fargo. They've been in the news for all the wrong reasons for pretty long time now at this point.
Yeah, I can't even really remember when the scandal first started.
Exactly.
It's definitely over a year now.
I feel like it was almost 2 years ago that they had, but we're not going to get into all that because that could go on for a while. But yeah, so Wells Fargo reported mixed results in its June quarter this morning, posting earnings of $1.08 per share, which actually fell below the estimates of $1.12 per share on revenues that just beat expectations. So they posted revenues of $21.6 billion, which just eked out a beat over the $21.5 billion estimates. So revenues remained in line, but average deposits fell about 2% year over year. And that's a lot to do with because they're really trying to recover from these reputational issues they've been dealing with, like Ryan and I were talking about, for the last year or so. And it's costing them a lot more money on targeted sales and marketing. And so based on their performance this morning, shares were down as much as 4.3% in early morning trading.
Yeah, the steepest of the declines in morning trading coming from Wells Fargo. Not a great morning in terms of early trading. Also for Citigroup, just looking at that report, outpaced the Zacks consensus estimates on the top and bottom line. $1.62 in earnings per share, above the consensus estimate of $1.54 per share. Revenue of $18.5 billion, also just kind of eking out the consensus estimate of $18.4 billion. This was Citigroup's fifth straight earnings beat and is a nice growth from the year ago period where earnings came in at $1.28 per share. So revenues and net income up year over year. That's definitely not a bad thing, but fixed income revenue fell 6% from June 2017, and that fixed income figure appears to be what people are harping on this morning. Stock down as much as 3.3% shortly after Friday's open. So again, just not, down 3.3% after earnings, certainly not what you like to see. It's also not the end of the world. Even JP Morgan kind of with the strongest results today, down over 1% in morning trading. Just not a lot going on here. We don't love it.
Yeah, it seemed like they were going to have to do something really big, really blow people away for it really to trend upward.
And that's not necessarily what we got.
Yeah, exactly.
That's the big bank earnings. That is it for us today on the Friday finish line. Tons of earnings reports coming up, and we will have them all for you here in the next few weeks. As a reminder, shoot us an email at podcast@zacks.com if you want us to cover a different story or if you felt that we missed something. You can also check out all of our other exclusive audio content at zacks.com/podcasts. Remember to subscribe and leave us a rating on Apple Podcasts. We are also available on Spotify. Search for Zacks Investment Research there, and you should be able to find all of our shows. Thank you again for joining us. We will see you next time on the Zacks Friday Finish Line.